A lower inflationary pressure for the month of December has pushed up the Purchasing Managers' Index to 48.8, representing a 300 basis point increase from the previous month, where the PMI stood at 45.8. According to the monthly data released by Stanbic Bank, the service sector companies reported an uplift in activity, while declines persisted, particularly in the manufacturing and construction sectors, as firms continued to signal cost of living pressures and weak demand conditions. Jimmy Mbogo now looks at how the different segments of the economy fared for the month of December and what to expect ahead.
Data from the Stanbic Purchasing Managers' Index for the month of December now shows that the softening inflationary pressures in the month signal stability in private sector business condition, with input cost and output prices being the softest they have been since April. This was further reflected in a 3-point increase in the PMI numbers for the month, from 45.8 points the previous month to 48.8 points by December 23rd.
50 is really the cutoff to show that the business is good. Anything above 50, anything below 50, show that the business is not as good. So it will mean that from 45.5 in November, an improvement to 48 means that there was improvement in general business condition.
According to the data, supplier delivery times increased to an average of 51.3 points for the month, up from 50.7 and 50.9 points in the previous 2 months. At the same time, output and new orders also saw an increase to stand at 47.4 and 49.0 points, respectively, with firms continuing to see a sharp improvement in new orders from foreign clients in the year's final month. Notably, the rate of growth accelerated further to the strongest since December 2021.
You'll notice that the dollar has been, the Kenya shilling has been deteriorating in the last many months against the dollar, from an average of 120 shillings per dollar to now 160 shillings. What that means is that any exporter who export the same volume of goods might earn more from that. So the exported goods have earned good, attractive prices.
Even with the softening inflation, the report shows skepticism from the private sector, with firms showing a mild degree of optimism in the year ahead, an issue that economist Marshall Nyangor further attributes to the uncertainty in policy, cost of borrowing and lack of available credit in the market.
If you look at the latest bond auctions, the government is borrowing from as much as almost 19% for 5-year paper. That has never happened in the last over 20 years. Where you see a 5-year paper giving you 19%.
Jimmy Mbogo, Citizen TV, Nairobi.